Hey everyone, in this video I wanted to bring you one dividend stock that's down 64% off its high that I think you might regret not buying on this big dip here. But before I reveal what the company's name is, let me share with you its dividend yield, its cash flow from operations, its operating profit margin, and its valuation. That way you get an understanding of why I'm recommending this stock as a buy right now. So let's get right into it, starting with the dividend yield. Of course, if you're a passive income investor, if you're looking for dividend stocks, one of the things you're interested in is the dividend yield. And this company boasts a relatively reasonable dividend yield of 1.17%. Now, I often say on my channel, when you're investing in dividend stocks, don't just look at the dividend yield. Don't let that be a make or break decision, because the change in the stock price could increase and enhance your return, your total return. And when you're looking at stocks that have a very high dividend yield, then you might be looking at a stock that has a high risk of the stock price falling. So it's more than just the dividend yield. It's an important thing to look at, but take a more comprehensive look. Let's look at more financial metrics here, starting with its cash flow from operations to sales. This company has a volatile business that is cyclical, as you could see with the ups and downs. And most recently, it had a trailing 12-month cash flow from operations to sales of 5.28%. It's not great and it's not terrible. I would rank this below average in terms of cash flow from operations to sales in a trailing 12-month period for across the universe of companies that I follow. Similarly, this company's operating profit margin also demonstrates the volatility, the cyclicality of the business that I mentioned earlier. Goes up and down, up and down. Right now it's down, so you're getting it at the point where it's down. But if you understand the cyclicality of the business, you understand it's likely to rebound again, but you're not buying it at the peak with an expensive valuation. You're buying it at the bottom here. So operating profit margin 4.07% in the most recent trailing 12 months. What is encouraging is that the lows of the operating profit margin have consistently risen. If we draw a chart, a line across the bottoms, and then if you draw a line across the tops, you notice that the highs are getting better and the lows are getting lower. The lows are getting higher. So I like to see that in these cyclical businesses. When they're reaching their peaks, I want to see higher peaks and I want to see lower lows, right? So that's what I see from this stock that has me looking at it and thinking it might be an excellent time to get in here, especially when I show you the final metric, which is its valuation. Looking at its forward price to earnings ratio, this stock has not been cheaper, arguably has not been cheaper all year. You're able to buy it at a forward PE of 9.269, so relatively inexpensive stock here that you're getting. So what is the name of this company? This is Alcoa. Alcoa, ticker symbol AA. Aluminum manufacturer and seller. So cyclical business, ups and downs, right? With the economy, as the economy booms, commodity prices rise, the business does well. When the economy's decreasing or slowing, this company does worse. So right now, I would say the area that's for overall global growth, China has been very slow to recover from the lockdowns. It's gaining momentum, although recovering slower than expected, and that's bringing down some commodity prices, as well as central banks around the world aggressively raising interest rates, and that's also slowing economic activity. But again, it's cyclical, right? When unemployment starts to rise, central banks will reconsider rate hikes and might consider cutting interest rates, which will spur economic activity again, and round the cycle goes. So that's why with these cyclical companies, it's good not to get them at the top because there is a fall coming. It's good to try and get them at or near the bottom of their cyclical cycles. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.